Hi, folks. It is my pleasure to introduce you to today's panel. Before I start and go much further, you would notice there are three of us here. It was supposed to be four. Unfortunately, with some technical connectivity issues, Susan could not be with us this morning. We are really hopeful she's still in the audience and can participate through the chat if you have any questions for her. But we will begin. I am Soumak Chatterjee. I'm a partner at Deloitte in our financial services team. I do a lot of payments work, and one of my interests for over the last few years has been on this topic of digital assets and digital currencies. Have with me Jesse and Rob. I had the opportunity to work closely with both of them actually over the last decade. With Jesse first at Deloitte, and then in his role at the World Economic Forum, and then Rob again at Deloitte, and also now that he is part of the Stellar Foundation. So like tremendously privileged to have both of them. I'll let them do their introductions in a little bit, but I wanted to start the dialogue off. We have had a number of conversations on digital currencies at the summit. And I think there have been conversations on the technology. There have been conversations around like what role do digital currencies play in the current and in the future. We've had a pretty interesting talk that I was privileged to hear from Dave Birch and Rob Golaski back to back, like a couple of days back, talking about the future of cash, talking about the future of value transfer. Like both of them have like set the stage up for this dialogue quite well. I did want to start by making a couple of definitions clearer, like the words digital asset, digital currency, cryptocurrency, CBDCs kind of seem to be used like in place of each other as almost the same thing. Just wanted to start by just demystifying that a bit and saying that digital assets represent a class of instruments that serve a variety of purposes. Like some may be financials, like purposes, some may be currencies. People would have heard of like non-fungible tokens representing art. People would have heard of CryptoKitties. Those are all different uses of digital assets for a variety of use cases. For the benefit of our sanity, we're going to stick to financial services for this session and payments in particular, and just concentrate on two major types. The type which we call digital currencies, which are like programmable digital native forms of money, for lack of a better word. And we're also going to deep dive in specific on those that are managed and issued in some form by the central banks, which come to be known as central bank digital currencies. So with that introduction, maybe I tee off the first question, and then I'll ask Rob and Jesse to start with a little bit of introductions on their side before they go in. And the question's pretty broad where we start. Like as you look at digital assets and digital currencies in particular in the financial services realm, like where do you believe like these have a role in the fabric of financial services of today and tomorrow? So why don't we tee off with Jesse for this one, and then Rob just following from Jesse.
Thanks so much, Soumak. It's a great pleasure to be here. Jesse McWaters, I currently serve as the global head of digital public policy for Mastercard. And as you may have heard from some of our announcements in this space over the last number of years, Mastercard is watching developments in the digital asset space very clearly. I think one of the things that I would really focus on here that has been a development that we're continuing to see gain momentum is the increased clarity of regulation in this space around digital assets. And I think that ultimately this is extraordinarily positive because it provides regulated financial players with the ability to move forward with confidence and explore the potential of these new technologies. And not just new technologies, but really, I think, a transformation of the way in which we think about the options that we have at our disposal from a perspective of value transfer. Because we've lived for the past 500 or some years in a world where the vast majority of assets and asset transfers are denominated in what's often called an account-based form, a form that lives, and breathes in a double-entry bookkeeping system, and the linkages that exist across the world of different parties' bookkeeping systems. And I think that's proved to be an incredibly robust, and resilient system. But ultimately, we're now working with assets that have more of what's often called a token-based set of characteristics. really the ability to act as a bearer asset that intrinsically has instantaneous and typically irrevocable settlement, and that has the ability to move through decentralized networks and to have programmability really kind of inscribed directly on the asset. And so I think as we see greater regulation in this space, creating clarity for the firms that have for hundreds of years run that account-based system, we're going to start to see, and we are seeing, focused exploration of this space, thinking about how the distinct characteristics of token-based assets, things like atomic swaps and programmability, can create real value for specific use cases that extend out of and beyond the currently highly speculative space of native crypto assets. And secondly, a focus on how to develop seamless, safe, and stable integrations between that traditional account-based financial system and these new and emerging pieces of infrastructure, which will have important considerations both in terms of ensuring efficiency and liquidity, but also the solvency and stability of these systems as they continue to integrate more and more with one another.
Okay, so, well, first of all, Soumak, I'm really pleased to be here with you and Jesse. I think we go a while back on the blockchain space where the industry was not even close to being what it is today. I remember we were tracking the millions, not the dozens of billions of dollars on the industry. So very excited to be here and to see what the industry is turning itself into. On my end, I'm Rob Durscki. I'm Senior Director at Stellar Development Foundation. I'm mostly focused on banks, CBDC, and consulting partnerships, which I think adds a nice flavor to this conversation here. And yeah, it's a broad question. I'll try to monitor myself not to go too far, but I'll just take a step back when we think about one of the components of the question, which is how does this new technology adds to financial services or connects to financial services? I think one analogy that is fairly common, but I still think very valuable, is the fact that the retail behavior for financial services is changing a lot. So if we think on the past 10 years, people were used to going to branches, or if they were using internet banks, the experience was far from ideal, where you sometimes would even see like mock-up mainframe screens being translated to browsers and shift between tabs and things like that. And the fact that the other retail technology companies were able to be much faster on the user experience, social media, e-commerce, content providers, and things of that nature, the pressure is natural. People want to translate that same experience to financial services. And I'm not judging if banks were fast or slow. I know regulation play a lot there as well, but my understanding is that pressure is going to keep on existing, and that's why I think it's such a fruitful field for fintechs, because they're bringing that experience to the end user, right? But that said, I think, and at the foundation, we discuss a lot about how blockchain is going to play a role in the future, and we're very pragmatic about not kind of feeding the idea that it's going to disrupt or replace things, but the idea that it will improve existing things, because I think there's no such thing as financial services of tomorrow, because for us who have been in the financial industry for years or decades, we know there's still 1970s and 1960s systems playing a very important role in the economy. And if you shut down those COBOL, ADABAS, and C mainframes, we just halt the financial system. But we have a bunch of stuff being designed today with iOS, IoT, virtual reality, or whatever. So those things, I think, are going to keep on coexisting for decades moving forward. And our understanding is that blockchain, as other technologies that are emerging, is going to improve specific experiences, specific use cases, especially on the payment, cross-border payment, remittances, deposit, positioning like emerging countries in more stable currencies, and mostly tokenizing assets and equities. So I think the two messages that we try to think here is that there's going to be a continuous pressure from end user for better experience, and that is faster, cheaper, easier to understand, and easier to use. And the second thing is that we're gonna and we hope there's going to be collaboration between incumbents and innovators to create these new products, right? Because they depend among each other. It's not a battle between who earns the pie, but who can work together to grow the pie.
No, I think that's a very cogent viewpoint, Rob. I think if I add a little bit on top to, and I'm trying to like pretend to be Susan for like 2 seconds, which I'll do a horrible job of, but I'll still try a bit. Is I think the conversations that like I'm starting to hear as we talk to our group of clients in the financial services space has very much like I think some of it was predicated by the growth and the interest in crypto, and I don't know how much of this is like Elon's doing versus others, but like jokes apart, I do feel that like the industry is at a point where like institutions are choosing to ask for access to this asset class, and financial institutions in the main in their business of providing safe, secure services to their set of clients are starting to think how could they provide safe and secure access to this asset class. Like custody tends to come up quite a bit in the dialogue as an area, especially Canada could go far. We're starting to see work being done in building the infrastructure for like safe transfer, holding, custody of these assets. We're also starting to see dialogue starting to go in the dimension of payments, especially in the US with some of the recent regulatory progress that has happened in that market. So like that's where I would go with the next question, maybe Jesse, to you. Like as you think of payments modernization, and like real-time payments is possibly a theme that has dominated like quite a bit like over the past years as you look at the US market and the global market, like the topic of how can digital currencies add value on top of what is being done on payments modernization programs around the world, right? So where do we see digital currencies fit in? Like, is this expected to create incremental value? Like, is this considered a threat to the existing payments network? How do you rationalize that topic?
So I guess there are a few things that I'll say here. First, I think you alluded to some of the developments that are happening in the high value market space, and while that's obviously not an area that I'm particularly focused on, I think that it's one of the areas in which we've really been able to see some of the early movement that we've been able to learn from. I think really, firstly, the ability to provide, from an investment management perspective, access to these assets, particularly for accredited investors by large investment banks, the exploration of secured custodianship, things like the partnership between BNY Mellon and Fireblocks, I think being interesting leading examples of that. And I think you're also seeing some really important explorations of how increased efficiency in the securities settlement world could be driven by this. This is something that DTCC has been exploring for a long time. And I think one of the most interesting examples of it recently is Project Helvetica, an effort by the BIS Innovation Hub, effectively exploring how a tokenized wholesale central bank digital currency could be used to streamline and reduce risk in DVP security settlement. So I think we're seeing some really exciting stuff on the high value space. I think we are earlier in our developments in the B2B and the retail space, but it's obviously an area that Mastercard has been focusing on, really approaching from a number of different angles. We're thinking about it obviously first in terms of providing interoperability and choice for customers. And so if you think about the deployment of crypto card programs, wherein folks are easily able to exchange and use their crypto assets at merchants that want to engage and interact in fiat. And you see a lot of different offerings there. Our recent partnership with Gemini. You've perhaps seen an announcement that we made somewhat recently about thinking about modernizing our network to be able to have account-based assets and token-based assets working side by side, and particularly exploring enabling the movement of regulated stablecoins that meet some of our core principles through our system. So that would enable an individual or a business to pay another individual, another merchant, or another business through the transfer and settlement of a stablecoin that would be intermediated by our network. And then finally, we're exploring what I think is one of the most discussed but least fleshed out views, which is the opportunities for programmability in retail payments. And I think in particular, our perspective, thinking about how to ensure sufficient consumer protection around all of these offerings, but particularly within the programmability space. How do you ensure that the types of smart contracts that folks are engaging in are, the sort of thing that they don't require a code audit in order to really be able to execute in a trusted fashion?
Rob, any thoughts on that question? How can digital currencies or central bank versions of the same enhance the work that is underway for real-time payments, as an example?
Yeah, so I think unavoidably we're going to talk about regulations, right? We have been seeing at Stellar that countries where the regulators have been more progressive on sandboxing fintechs and more specifically giving some sort of guidance, even if it's gradual, regarding custody and stablecoins, it's where we see the most traction. I think even in countries where you already have some crypto regulation, mostly on the crypto asset exchange and KYC side, which I would say it's like step one. You would see some fintechs taking some risks on the payment and retail use cases side, but it's only where we see solid stablecoin and custody regulation is where we see the industry really thriving, where bigger and smaller players are partnering together. So we're seeing stablecoin regulation movements in Turkey, in Japan, in China, in France, in the US, and therefore I think that's a great path that Canada could pursue, because meaning I think all of us know at least a dozen of companies in Canada that are waiting for that to be out there to start investing more heavily or start going public with their projects. So yeah, I could go in many ways, but I think my key thought now is that the way of the land got to be laid to the industry, even if it's gradually. I don't think it needs to be a 50-page regulation that covers everything, but sandboxing and giving basic guidance on who can custody, who can't custody, and what stablecoins can be used for and what it can be used for. It's a great way to start incentivizing the industry and enabling growth.
Any particular one where we would go deeper, Rob, like in your remit, like are there a couple of jurisdictions who've done it well and any learnings from there?
I think the US for now has been doing a great job. I know part of it is state-driven, not necessarily national-driven, but nonetheless, it's been giving room for people to innovate. Singapore has becoming a huge harbor for Asian innovators, a lot of them moving from Japan to Singapore, including. I think Europe and East Europe still early, but I know countries, Ukraine, Turkey, Poland, they're all working and some sort collaborating on creating a stablecoin a discussion. Yeah, so I'll park there, but I think regardless who is in front or not, I don't think this is a first mover advantage play. I think each country has its own demographics and they're very different, as well as the payment challenges. So I think the important mindset is not to go big bang, it's to go in small steps and just enable innovation to gradually go along. So yeah, that's kind of what we're seeing.
I think I'd point to one more regulatory initiative that I think has been particularly important in this space, which is MiCA, or the Markets in Crypto Assets Initiative, currently being pushed quite aggressively through the policymaking systems of the European Union, really endeavoring to create greater clarity around stablecoins in particular, including the clear delineation between asset reference tokens that are backed, often by a variety of different assets, or may or may not be fully backed, and what they're calling e-money tokens, which are really kind of the what you would think of as the top tier of stablecoins, fully backed, subject to audits, subject to liquidity cushions and buffers, and I think that type of clarity that they're offering, both in terms of the treatment of these tokens, as well as making clear delineations between the different varieties of stablecoins that exist, are really critical, and it's an effort that we're very supportive of.
So one part, so like I think this is a good segue to the part of the job of your job, Jesse, that I'm particularly envious of, is your like broad global remit of looking at this from the network standpoint with a wide cross section of jurisdictions and countries. So like I think at a level, I believe there is being conversations, especially in the central banking network with the Bank of International Settlements and whatnot, that have driven some cohesion on the main themes, but I still feel that there is ground to cover in terms of coordination globally. Like what are some ideas that you would have, like as you look at this from that vantage?
Well, so let's talk about central bank digital currencies specifically here, and then we can broaden from that if we want to. And I think one of the biggest mistakes that people make, to my mind, when they think about CBDCs is to treat them as a monolithic endeavor, or to imagine that every country's central bank digital currency effort sort of looks more or less like every other. And let's put to aside for a moment wholesale CBDCs, which are really focused on driving efficiency, reduced risk, and new capabilities in the capital market space. And even when we think about retail CBDCs, effectively efforts to create new digital instantiations of central bank money accessible to the the average consumer, I think the forces that you see driving those are enormously different. And for me, I kind of think about them as existing within three different buckets. The first is really focused on money as a store of value and the unique role that the central bank money plays in the context of an economy. And so I think a great example there is Sweden, which is really focused on a commitment they feel they have to their consumers to providing continued access to central bank money amid a declining use of cash. And also Canada, where you see a really clear focus by the Bank of Canada on the use of a CBDC as a precautionary tool to ensure that the Canadian dollar continues to have, and that the Bank of Canada continues to have monetary dominance, that Canadian dollar issued by the Bank of Canada plays the sort of central role in tying together the financial life of the country. And I think it's really notable that in this first category, it is only the central bank that is able to play this role. The second category of drivers that I see are new payments functionality. And so this is driven by discussions of faster distribution of government services and stimulus, programmability, financial inclusion, all kinds of narratives here about how a central bank could play a role in delivering all of those good things. But I do think it's critical to remember that central bank digital currencies are just one way of delivering faster government stimulus delivery or financial inclusion. And these services could be built into other projects, either those delivered by the private sector or those being delivered in a public-private format, like a national real-time payment infrastructure, for example, which would use commercial bank rather than central bank money. And then finally, I think we see examples where CBDCs are being used to achieve non-economic goals, such as restructuring the competitive landscape or reinforcing the resilience of a country. And so if we look at China, we see a clear sense in which that CBDC seems to be getting used in a way to reshape and create new options within the domestic payment landscape. Or if we look at the European Union, where there's a clear drive to achieve increased digital sovereignty, as it's being called, effectively European payments independence. And so I think what we need to think about when we look at these projects is we need to ask ourselves, what is a given central bank trying to achieve? And what are the best ways of achieving those policy objectives? And then finally, and importantly, and we can talk about this a little bit later, what role can private sector actors that have deep expertise in the retail payment space, something that not all central banks have, what role can retail payment experts from the private sector play in supporting and enabling those central bank digital currencies that are really a good fit to the policy objectives that a central bank is trying to achieve?
Great. Rob, you had some thoughts. Maybe we go to you next.
Yeah, I mean, I got really excited because I think Jesse hit the nail on the head, and it seems we almost rehearsed this answer, because that's a lot of what we're debating internally at SDF. So we think that the one size fits all conversation about CBDC doesn't add value to the industry, because it's not a single topic conversation. So the first thing that we realized as we're talking to different countries in different continents is that the demographics play a big role in understanding the relevance and what kind of CBDC, if at all, a country would be working on. So if you look at Canada, for instance, you have maybe almost the same penetration of credit card as you have of smartphones. But if you go to East Europe or Africa, you would have a very uneven distribution of both internet, smartphones, and banking, being banking very likely on the lower end, where people are still using cash heavily or other sort of financial transactions to just go along on a daily basis. So the first thing that, as we're now engaging with more governments, and we're learning a lot, because Stellar is not trying to be the one with the answers, but just helping with the questions, is what are the pain points on that geography that a digital currency might or might not help, and then build the technology on top of that, right? Because even the idea of wholesale and retail CBDC is a bit tricky, right? Because there are multiple use cases on both kind of sides of the spectrum. So we're actually avoiding that terminology internally as well. We're now talking about full feature CBDC, and if not, a use case driven CBDC, which sometimes go from wholesale to retail, but it still is not full retail. So if you look about like the aid fund disbursement for COVID and other emergency, that might be in a specific use case where countries where individuals don't have access to banking could use a government app on their phone, which enable them to do payment or withdrawals through a CBDC for relief funds, right? But on the other hand, you can just go completely broad and say this is going to be issued by private banks, and it's just going to mingle with the normal fiat currency, but just do it on a cheaper and faster way. So I think this is not kind of an answer, but just a question for us to think about, which is, CBDC became kind of this umbrella concept, which I think is important. But as we're maturing this conversation between, consulting firms, payment firms, blockchain firms, we're going to have to go deeper on use cases and the particular needs of each country, right? Which I think in case of Canada is very different than other countries that we're talking. And by the way, I missed the Caribbeans. A lot of nations there are doing a great job on either regulatory and sandbox side as well. But nonetheless, very different demographics, very different needs. And I think the projects need to address that, accordingly, without the expectation that, Deloitte, Mastercard, or Stellar Foundation would come with a solution. Say, you just plug your system with this API, and we're done. I mean, I hope it would be like that, but I don't think that's the path moving forward.
Yeah, like if I go back and parse a bit of what you said, like it seems to me that I totally subscribe to the view that like the policy reasons and the use cases are going to be different by market. And often we sit in our North American seats and we just think of the world from the North American lens. But like it's not the same when you go out to like other parts of the world where the challenges in the socioeconomic fabric is very different. Like in some cases that like the implicit trust that we just expect here from our central banks is in a very different place. So I think like the notion does change, like when you look from one jurisdiction to other. Like, are there concrete ways though, like countries or even nations within a certain like economic fabric like the European Union, it can come together around like experimentation, around sharing of governance? Like, are there things happening that are concrete collaboration on the ground between global jurisdictions that you can speak to, or is it largely still being pretty like siloed?
So, Soumak, I would say on that I think it's important for us to think about coordination at two levels, domestically and internationally. So if you think about the development of CBDC, I think sometimes people are inclined to think about it as a standalone, almost compartmentalized system. But ultimately, a CBDC, in order to be effective, has to integrate with and interoperate with the existing payments landscape in a way that promotes the seamless movement of money for consumers, in a way that promotes efficiency in a way that ensures the safety and stability of the financial system, whether that's subject to fraud or cyber attacks or any of those sorts of things. And figuring out how to set that up is inherently going to be a unique undertaking, even for two countries that have very similar policy goals, because they'll have different pre-existing payments landscapes. And that's actually one of the reasons that at Mastercard we chose to develop and now deploy what we're calling our CBDC testing platform, or sandbox, which is effectively a technology environment that looks to replicate the payments landscape of an individual country, and to be able to bring together a variety of private sector actors alongside a partner central bank to really start to experiment with different approaches to that interoperability and that coordination in order to ensure that everything can work well together. And I think that's separate and distinct and equally important to the thing that you alluded to, which is international coordination. And I think we're seeing actually some fantastic work right now, particularly the Bank of International Settlements Innovation Hub, but also players like the IMF and the World Bank, convening conversations on how we can effectively link systems and use technologies. And so if we look at the G20 cross-border payments program, we see specific efforts dedicated to stablecoins, linked real-time payment systems, and linked CBDCs, thinking about how they could ultimately potentially enable greater cross-border payments. And I think that that type of work is just going to be really critical to delivering the type of more efficient and more transparent cross-border exchanges that we're looking to in the future. There is, however, one caveat that I'll put in that I think is something that we need to think very cautiously about, and that we've seen entities like the FSB and the ECB and the IMF all thinking about, which is that if we start to move central bank digital currencies cross-border, there is a risk that we will disrupt third-party economies in ways that was not our intention. And so we talked about environments in which there are maybe weaker institutions, or in which the government doesn't enjoy the same level of trust that we have in Canada. And I think that what you risk as you think about cross-border CBDCs is effectively seeing the dollarization or euroization of smaller economies via CBDC, something we know can have pernicious effects on their long-term development. And so I think that type of coordination internationally is also critical to ensure that there are appropriate limits put in place so that we don't have technological developments in our backyard negatively impacting our neighbor's yard.
No, I think so. That's a great. I actually did not think about that. I think I've always rationalized this as the East versus West debate. To my, yeah, I think that's there are definitely unintended consequences on economies that we definitely need to think, and that is probably a place where Bank of Settlement and other global bodies need to play, maybe even World Economic Forum for that matter, might be interested to play interesting roles in there. I'm getting a couple of pretty good questions here, so maybe I'll talk about we'll go to the questions next. So, and most of the questions are coming up on a few themes. As we have been working in this space, and we've been talking to most of the market participants, including retail consumers, on the topic, I think there have been some themes which have come up, and those themes have been based around one, monetary sovereignty, and what does it mean when you have a CBDC, especially on the back of big tech, big tech projects like the Facebook one, and what does that mean for central bank? There have been the other side when you talk to the retail market. It's predominantly goes around this notion of privacy and how much control do I actually cede to the central bank more than what I do today, right? So there's a genuine concern, or there's a genuine desire to understand the ethics of programmability of money, right? Today you get aid, and there's this belief that you should spend the aid on things that you are given that aid for, namely housing or food or whatever else, but there is no controls that prohibit you from spending that aid in ways that it was not supposed to be given to you, right? And in future, if you tie in this notion of programmability, there is definitely an ability for governments and central banks and whoever else are the issuing parties to monitor, to control if you're not doing this in a way that those are part of the design. So I'll throw this to both of you maybe, and maybe we start with you, Rob, this time on what do you think about the ethics of programmability of money?
That's a great question. And I think it ties back a bit to what Jesse spoke about on the trust that each government has with its own public, its own people, and how much people are going to trust what they're doing, right? But the point, I think, is that regardless if it's through CBDC or not, the authorities would have a way to do those sort of things, either better or worse, but they can do that through regulations on top of banks or through just changing currency settings, changing interest rates. So I think there are many levers that the government can pull to either do things to increase liquidity, reduce liquidity, or let's say in a hypothetical example, do things that might be negative to the population, right? So on the foundation, what we think is that the blockchains, the protocols that are going to help governments to create this sort of asset and technology have to provide features that they can use to enforce monetary policy. We don't think it would make sense to introduce a technology that reduce the controls that the government have. I think it's something that has to increase usability, but has to provide the tools that the authority, which is, in most of cases, democratically elected authorities to control those features, right? So a comment that we usually do at the foundation is that no blockchain was designed to support CBDC by inception. That is something that came later. The protocols were designed for multiple use cases, right? So one of the things that we're working hard is to understand what are the features that make sense embedding to the protocol to enable CBDC. So I think since version 14 of our protocol, and we launched 17 last week, we have basically just been adding features on the controllability of assets, right? So just to give you some examples, now we have a class of assets called authentication required assets, which are the ones that the issuer need to whitelist the receiver. We have another feature called issuer enforceability, which is exactly, I think, what the question asks about, which is if some sort of fund is disbursed to help something, it doesn't get used for something else, right? So let's say it's a COVID money and it gets used for liquor or just fun, right? So I think those features they should be there. We should allow governments to do what they need to do. I think the concern about trust, it's transcendent. It goes beyond blockchain, right? Meaning governments are going to do weird things in weird governments, and they're potentially going to do better things with better technology. So I think, the question is actually posed how comfortable we are with whoever is setting the policy and enforcing them. But I think technology should help that to get enforced. But my last comment is that needs to be transparent, right? So I think today, or using blockchain, governments should be transparent with the nation with whatever controls they're doing and how they're doing, right? So I'll pause there because that's kind of a rabbit hole topic.
Yeah, I think I largely agree with what Rob has said. I think that, in general, across this topic and many others, technology should be the cart, not the horse. Where we value privacy, it will be essential for us to incorporate that into any new infrastructure or applications that get built. And there will need to be a robust discussion through the realms with which these things are decided, whether that be regulatory consultations or legislation, to define the execution of that. But I think it's critical for folks to understand that inherently there is nothing to prevent a central bank digital currency from providing a high level of privacy. And so if you think about it, there are many models of the design and deployment of a CBDC that wouldn't have individual transaction data reach the central bank. Instead, it would be structured exactly as an ACH is today, in which you have individual banks able to conduct on-us transactions within their system, able to engage in clearing and batching across institutions, and having that ultimately roll up to the central bank. And if I make an individual payment from bank to bank to Soumak, particularly if we're at the same bank, the central bank isn't going to have any visibility into that today, and they need not, depending on the various design considerations that come together around a CBDC. Moreover, I think you can see in places like Europe where they're thinking about adding new types of privacy. Let's talk about having a limited number of privacy vouchers, for example, for specifically private offerings. What I do think is critical in the privacy space, though, is that we need to strive to ensure a level playing field between public and private offerings. I think we need to recognize that cash and the unique privacy attributes of cash are not a design feature that was specifically chosen, but instead the kind of inevitable result of the nature of the development of that asset. When we think about transactions that we want within the system today, we generally agree that they should be subject to a certain level of AML, for example, and CTF oversight. And so I think that ultimately we should look to ensure that there's a level playing field across all of the different payment systems and value storage systems that we have, whether those be offered by the central bank or by public-private infrastructure.
Yeah, amazing. I think like the point that I will go to exactly on that is, like, for us payments nerds who spend our lives on this topic, that was possibly easy to understand. But how do we educate the retail population? Like, I think it's a question from Oksana out here, like, which is where my head was going to on, like, the normal folks on the street will have this belief, or perception is often like what you need to break, that like how do we educate, how do we drive adoption? We have done a bunch of work in the recent past in Canada surveying the retail market. It does seem that the field is fragmented right down the center. If I could run the numbers, like we went on a broad survey, 51% indicate that they would be comfortable, 49% are on the fence. The numbers are higher when you put Bank of Canada in the middle. That's understandable given it's Canada and the trust we have with the central bank. But I think like that's not, like, we need to do a lot of work as these things become more prominent. Any work you're seeing, any thoughts on that? Jesse, maybe start with you.
Sure. So I guess what I'll say on this front is that I think that we need to be careful, particularly as folks who live and breathe the payment space, not to overestimate the level of understanding that exists among the various counterparties that we're working with around this. So I think I will say that I've had a number of conversations with folks who I think have not fully grasped the difference between central bank money and commercial bank money. And I think that the kind of narrative that the average consumer deems strong value in being able to instantaneously settle in central bank money is suspect to me. That feels like people who are, who grew up in payment systems or in capital markets, really kind of transferring that to a retail experience that I don't think necessarily holds. At the same time, I think sometimes I'll talk to folks in this space and that there is not necessarily an appreciation of the complexity involved in setting up an acceptance network that involves multiple parties, whether those be merchants, private financial institutions, emerging fintech players, and establishing a high level of coordination and trust among those players. And so I had a conversation with a senior central banker from a country that will remain unnamed, in which I said, okay, well, you've got your digital unit of value on your phone, you've got your CBDC, you go into the local store, you want to buy a stick of gum, how do you do that? And he said, well, it's just the unit of currency. You'll just, you pay with it. And you say, oh, okay, yeah, but how does the merchant accept those funds? Do they have a terminal? What is it? He said, oh, well, that just all works itself out. Which is to say that, those of us in the payment industry have succeeded in making the system look extraordinarily easy. But we know that there's actually an immense amount of complexity behind that type of system. And in particular, ensuring that it remains safe, stable, isn't pervaded by fraud or security challenges is extraordinarily complex and challenging. So I think recognizing that payment systems, new payment systems and infrastructure aren't necessarily easy to set up, and that we're all going to need to do a lot of learning, particularly to set up a new type of system like a CBDC, is just absolutely critical. And so I think we need to come at it, no matter what type of stakeholder we are, with a bit of humbleness, knowing that we all have a lot to learn and that we're going to need to collaborate on experimenting with different ways that we could set up and deploy this infrastructure.
Rob, I'll give a different question to you just to maximize the coverage bit. I think the question I was going towards you is around mainly two things. One is innovation. As you look around the world, where do you feel the trajectory of innovation is going? Let's talk about that a bit, and maybe also intro to the point that Rob, Jesse raised is around collaboration between private and public. So maybe you tee off on that as our penultimate questions. I have one last one that I'll throw, and we have 10 minutes to go.
Gotcha. Yeah, so when Jesse was talking about 2 layers of collaboration, I totally agree. And I think on the international front, we are lagging behind a lot, but it's hard to say because we're also not doing a lot to try to move it forward. But I think one thing that even Deloitte, Mastercard, and the foundation could help each other is taxonomy. We need to be able to create some sort of shared taxonomy in this industry so people know that they're speaking the same language, because if we want to make the retail user to trust the product, we ourselves need to be saying the same things towards the retail users, right? So I think that's the first step of collaboration. But going to your question specifically, I think the local collaboration is vital, because it's very hard to envision, and I might be missing something, a CBDC, if it's a full-feature CBDC that runs totally on government infrastructure, right? At some point, it's going to reach private infrastructure, either through the banks or the merchants or e-commerces or fintechs and things of that nature. So the countries where we're seeing the best development, and I think some of them are public, some aren't, but it's places where they are doing sandboxes with banks. And when the public institution, the central bank, and some countries have retail public banks like Brazil, so then they have a good situation where you can go all the way down to the end user using a government owned institution. But regardless if it's a private or a public retail bank, the thing is that you have to test it from end to end, right? So there's a particular country where we're doing a project on CBDC where the scope is doing end-to-end sandbox testing and going back to all the value chain and proving and testing if it works, right? So we're talking with the monetary authority, we're talking with the association of banks, we're talking with the retail users and checking the experience on the end-to-end. So issuing the CBDC, allowing banks to buy it, allowing retail clients to get it on their wallets, allowing merchants to get paid and merchants to use it either as a yield-bearing deposit or just resettling their debts or credits, right? So I think the local collaboration, it's not that complicated. It's basically the regulators setting some sort of basic guidance on what a stable coin or a CBDC would look like and getting closer to the private banks and see if someone volunteers to be the pilot on that project. So yeah, back to you. I think the innovation will require, especially on the CBDC, I think crypto is a very broad term, but especially on the CBDC, requires this public-private collaboration and some sort of regulation that ensures to the ones that are playing on the sandbox that it's safe to test, right? So yeah, I'll pause there.
I think Rob's absolutely right. I've yet to meet a central banker who's excited to set up a customer call center.
I think that's a good one to tap that topic around. I think I'm going to go to one question that is a personal favorite and has come up a number of times. And Jesse, I'll go to you for a short-ish answer on that if you can, around the impacts, implications. We've heard a lot, and I can see on Ryan's comment in the room chat as well. This view of impacts, implications in the event that CBDCs actually cause some substitution of commercial bank deposits. Quick thoughts on that.
Yeah, well, I mean, so I think this is a really important issue, and I think it's important to first note that this is not a surprise to central bankers. They understand that there is the potential for a CBDC to draw money out of commercial banks. And I think it's important that people not conceive of that within the narrow framing of a public institution competing with a private one, though I think that is part of the challenge, but rather that we're talking about drawing funds out of banks, which have a role in the allocation of credit, but also in effectively the creation of money in our economy, and pulling it into the central bank's balance sheet. And that isn't necessarily a problem, particularly if it's not volatile and if it doesn't happen at significant scale. And so when you look at the ambitions that most central banks are articulating, they don't imagine a CBDC replacing your checking and savings account. They imagine it more along the scale of replacing the current usage of cash within fairly electronified environments. And so the real thing becomes figuring out how to ensure that the movement of funds between the CBDC and the commercial banks is neither too large nor too volatile. And so we're seeing central banks really proceeding carefully around this, doing testing, doing surveys. I'll expect to see them doing significant and quite long pilots, as we've seen in China, really to understand the dynamics around this, as well as to understand the effective guardrails that can be placed in this space, both thinking about limits on the total holdings of a CBDC that an individual or a business would be able to hold, but also thinking about a variety of price mechanisms, sometimes called tiered remuneration, that would strongly discourage you from holding too much CBDC and effectively, pulling that money out of the broader economy by doing so.
Fascinating. I think that's a topic for another full panel, possibly. So we'll just.
I think the biggest thing there, and you see it talked about within the context of a lot of central bank papers, is just the enormous size of what we don't know.
Right.
It's a fundamentally new asset. We don't really know how consumers are going to engage with it, particularly as they get educated. And we need to make sure that it doesn't ultimately undermine the effectiveness of monetary policy or the stability of our financial system. And so I think seeing the type of collaboration we've talked about to ensure that a CBDC is pro-stability, I think is just absolutely critical as we move forward on this.
Awesome. We're coming to the close. I think the time just flew by. And it seems we're back again in a room talking about this topic. I think what we'll end up on is a quick comment around pace and timing. I think Spencer had a question on it, and me and Spencer's part of my team, so we keep on betting and losing on this topic. Two questions, very quickly, 30 seconds each, possibly. What do you think is going to be the pace of these movements in developed countries? Let's specifically focus on the ones where we focus, which is North America. And two, what is going to make this happen versus not? Is this threat of big tech, or is this disintermediate, or this cash topic of cash getting extinct the point, or are there other drivers that will drive the pace, or does it not matter at all?
I can start. I think this ties a bit to what Jess said as well. I think it's very unlikely to be sudden, and I think it's very unlikely to be a disruption to liquidity or banks, just because the value proposition on the central bank side is likely never going to be the same as private institution and how they communicate and how they offer their services. So ideally, they will collaborate to offer something that add value. Oh, can people get access to it directly? Maybe, depending on the model, but I don't think that's going to create a huge shift of capital, because the value proposition is not going to be as simple and as easy to understand. And going to the timeline, I think that's a very a hard bet to do. It's like betting on foreign exchange. But my understanding, we're going to be seeing relevant projects going live on the next 2 years. That's what I'm confident to talk about, with countries that have some GDP significance internationally and some of the ones we're working with. But regarding G7 or G20 adoption, I would still think it's more of a 5-year frame in some sense, because
let's just see the last 30 seconds.
Yeah. Central banks are slow and careful by their nature. They will approach this slowly and carefully, and they will only launch when they are confident that these things can be stable. And that is a process that will take time, and there'll need to be clarity of the vision of what these CBDCs want to achieve. On the crypto asset side, I think the pace of adoption depends on the ability of the industry to provide convincing value propositions oriented around specific use cases, and to drive the necessary collaboration between partners, And I think no matter how it evolves, we at Mastercard are really committed to supporting consumers, governments, and businesses in pursuing their chosen approach to payments modernization and to providing them with a wide variety of choice.
Awesome. We will close there. Thank you so much, both of you. It was really engaging, especially to talk to you. I'm so envious, Rob, that you're actually in Miami right now. So thanks, and till next time. Thanks, everybody. Have a good afternoon.
Thank you.